Tom, pretty interesting feedback and information from Morgan. I'm curious to hear what your thoughts are on overall the venture space.
Yeah. So, the last thing he said is, I think can be applied to, for the most part, any industry, right? I mean, even in real estate, we're not going to, I don't go out and try to figure out how to do industrial. So I don't know it. Right. So he, I think what he says is smart. If you're not a big name brand like BCAP or Sequoia or Andreessen, you're going to have to become a master of your domain to find the best companies that are probably in the blogs that no one's talking about. Right. So
to echo what you just said and what Morgan just said, I think, it's absolutely right. If you're going to be an angel investor, seed investor very early on, I think you can't just be a passive venture investor. Go buy a micro small cap ETF or a small cap and get access to the market beta that way. Unless you can be a strategic investor, in my opinion, and actually have an outcome or an effect on the outcome of your investment, I think that's the way to go. There's nothing cooler than going to a game and trying to have an effect on the game. When we're investing in the stock market, we're really kind of spraying and praying, if you will. But if you are an expert in whatever domain it is that you exist in, for you, it's real estate. And somebody comes to you with a real estate idea, perhaps it's some sort of a real estate tech idea in order to optimize the way that you do business. You might have an interest in that. You might be able to help facilitate that growth, minimize that J curve.
Yep. Yeah. But again, I mean, it goes back to knowing your domain. I mean, I get deals all the time that are RV parks and places in different states. I mean, I don't know what I don't know. So I stick to my guns, right? And obviously Morgan's, again, BCAP has the benefit of having a long list of high quality deals. But as you mentioned, as a small angel investor, right, you would look at 50 deals before you invest in one. But think about, I mean, he could do 1/10 the amount of work. Your underwriting has to be way more long-winded for you to be able to successfully, or I guess, more appropriately deploy your capital. So, that's a really important part. I thought also, interestingly enough, we know the valuations have plummeted, more than half of what, 25, 30x multiples on top line have come down to more grounded levels. I would have loved to have known what he thinks the future holds. Do we get back to those valuations, or are we going to be sticking in the 15, maybe 20x multiples for time to come?
That's a great question, and probably I'd say the $1 million question, but you could probably turn it into a $1 trillion question. Yeah. There's a lot of folks saying we're not out of the woods yet. I personally don't think we're out of the woods. I think things are definitely going to take a bigger hit, but let's see. Obviously, when we look at direct real estate deals, a lot of smoothing, a lot of lagged returns, a lot of lagged pricing. I am seeing a direct negative return in multiple markets. Obviously, the stock market had a bounce back, and now we're kind of going the other way. I'm still uneasy. I don't feel great about it. And I think I'm trying to be as realistic as possible of the effects of the Fed just continuing to raise rates to lower inflation, but I think it's going to stop the economy dead in its tracks. Yeah. And I think that is a major, major problem, that we're just so myopic on stopping this one leak in the economy, if you will, and we're going to go to that one leak. Meanwhile, there's about 6 or 7 new ones that are sprouting out. Yeah. And I'm just very concerned that we're going to be heading the wrong direction. The best news, and I've said this forever, the consumer, the individual investor is in pretty good shape, although all the sources are saying, the credit card balances are going up. But for the most part, people are going to have jobs. I work for myself. I can go back and do what I did tomorrow. Right. And have a nice 6-figure income. I could go wait tables. I could go Uber. I could do whatever it is and make money.
Yeah. Yeah. I mean, I just, last night I was on a spiral watching Chamath, watching Munger, watching Peter Zion, like, all these top thinkers talking about where we're at in the globe. And, it's the disconnection of globalization. It's the global inflation. It's China having a massive issue right now. It's Russia imploding, at the same time, supply chains constrained. And meanwhile, a lot of our inflation numbers are coming from rent and energy, which great. Increasing rates doesn't do anything for rent. You have to build more to drop the rents. That's going to be a problem if costs go up for borrowing. Oil is going to be high for some time, right? Now gas is probably going to go higher. So inflation's here to stay for some time. It's interesting though to see the Fed just completely destroy demand in hopes that somehow nat gas, oil, and rents all come down. And I just don't see a world in which that happens for some time.
Yeah, I mean, again, I talk about elasticity of supply and demand all the time, specifically as it results in real estate. It's probably less elastic, or I'd say more elastic in the energy space. But where I'm going with this is, alternative energy starts to ramp up quite a bit when we're in these environments, and then you get to that kind of inflection point where it meets the intercept, and voila, now all of a sudden energy is cheap again. So it's this constant yin yang effect. But I think it's just being super myopic about this one area. And there's a term called Dutch disease, which refers to the Dutch earning a lot of their country's wealth through energy, and it hurt other industries. And where I'm going with that is it's not necessarily Dutch disease. It's almost the reciprocation of, or the inverse of it, where we're so focused on this one area. I think we're going to get blindsided in this economy. And it's something that we really need to pay attention to. But I don't think the Fed they just don't seem like they're handling it well.